Hey, what's up, folks? It's Jesse with Keeping It Real Finance, the channel that always has your back and tells it like it is. Well, I have got a treat for you today. This is a comprehensive video that I have been waiting to put out for a little while now that is all about the impact, the influence of the Bitcoin ETFs and how you can easily become a millionaire by participating in this process, okay? There's multiple ways you can do it. There's so much going on here. There's so much money coming into the Bitcoin ETF. So we're going to be breaking down all of that in today's video. I'm really going to be getting into sort of the nuts and bolts of this thing in terms of who's offering the ETFs, what do they look like from the inception till today, kind of where this whole thing is trending. Where do I see it going, right? Where's the chess game of this thing going down the road? That's the really important part for anybody who's watching this video. It's a huge opportunity for pretty much anybody who's out there who wants to participate in it, and that's what today's video is all about. So I'm going to break it down, and then at the end of the video, I'm going to have some very detailed final thoughts that are going to kind of wrap this thing up. Stick around for those because I've got lots of very important points here. Now, if this is your first time to the channel, as always, make sure to subscribe. If you enjoyed today's video, make sure to hit the like button. And with that, let's get it going. All right, what is up, everybody? Glad to be back with you on this long-awaited video all about the Bitcoin ETF. So the only way you haven't heard about the Bitcoin ETF is if you've been living under a rock or if you really just don't follow finance topics in general, investing, yada, yada. But this is something, whether you do or don't follow it, it's really something you need to be aware of. It's extremely important, and I want to break that down in today's video, as well as kind of tell you, the different ways that you could get into this thing and that it could help you out down the road, right? So here we go. This is where everything starts. So right here on January 10th, we had a statement on the approval of spot Bitcoin exchange traded products by Chair Gary Gensler of the Securities and Exchange Commission. So January 10th. And bear in mind that this was a decades-long process. It took an entire decade for the SEC to approve the Bitcoin ETF. A lot of that kind of centers around this is uncharted territories. These are unregulated markets. These are worldwide. They're heavily manipulated. But even with all that bad stuff, there's a lot of opportunity here. So it's a bit of a double-edged sword sometimes. But as long as you do things the right way, you should be okay. All right. So a decade-long fight with the SEC finally approved on January 10th, 2024. Now, as of February, there are roughly 11 spot Bitcoin ETFs. All right. So why is Bitcoin so influential? Okay. So we're going to go ahead and I'll post up the thumbnail right now. And on the thumbnail, you can see I've got essentially the moon with a magnet. And why is it so influential, right? This is kind of a big analogy for Bitcoin. Well, Bitcoin, if you're unfamiliar with this, is as of right now, and this number fluctuates, but as of right now, April 3rd, 2024, it is roughly 52% of the entire cryptocurrency market is Bitcoin, okay? One coin is over half the entire market. Now, why does that matter? Well, the reason it matters is because of something called Bitcoin pairs. So if you ever go on different exchanges, whether they're centralized, decentralized, typically you will find something known as a Bitcoin pair. And now Bitcoin is not the only coin that's paired. There's plenty of stable coins paired, other coins that are paired. You can pair basically anything. But the point with Bitcoin is it is the main kind of granddaddy that's paired. And being that it's 52% of the market, it influences everything. So what do I mean by this? Well, I mean that you can buy Bitcoin on an exchange and you could trade it for another coin. So for example, if I wanted to trade my Bitcoin for Ethereum, I could get a Bitcoin ETH pair and I could just simply swap it and move it over to Ethereum if I wanted. That's kind of what we're talking about here. So these pairs, these links, what they mean, Bitcoin, think of it like a balloon taking off and other balloons attached to it by string. Well, it's the big one. It goes up. They all go with it, right? So in my example in the thumbnail, I use the example of the moon, right? So the way the moon works with the tides on planet Earth is the closer the moon is to the planet, the more influence it has over the tides, meaning the tides can be bigger when the moon is bigger. So every once in a while, especially where I live here on the East Coast of the US, there will be a really, really large moon out of nowhere, right? And it's a really awesome thing to see. And what it does is it creates significant tides, which can, there's something called like a king tide. They can influence flooding, all these things, right? So it has a significant level of influence. And Bitcoin is basically the exact same thing with the cryptocurrency market, okay? Now, what's amazing here is that with this approval of the Bitcoin ETFs, this basically changes everything right now. So previously, if you want to buy Bitcoin, you would have to buy it on an exchange, and basically you would have the custody either by keeping it on the exchange or pulling it off to your own cold wallet, let's say. Well, now you basically have the opportunity to invest in Bitcoin without the risk of the custody part. Now, I fully get it that people at the beginning of Bitcoin are all going to say, that's insane, you want the custody. True, but with somebody like a BlackRock, for example, they are marketing towards institutional investors. Okay, it's not really people. Institutional investors may or may not actually want to hold the Bitcoin, the actual coins themselves. They may just want the access to the investment possibilities and let somebody else take care of the risk. Okay, so in terms of BlackRock, I wanted to show this real quick before I show the Bitcoin ETF Tracker. So this was a post here by Cointelegraph, specifically where it says BlackRock CEO very bullish on Bitcoin as its ETF crosses 17 billion. This was on March 28th, 2024, less than a week ago. Okay. Now in here, they have quotes from BlackRock CEO Larry Fink, who's been, quote, pleasantly surprised by the performance of his firm's spot Bitcoin exchange-traded fund, and has reiterated he's very bullish on the long-term viability of Bitcoin. And he says here, IBIT is the fastest growing ETF in the history of ETFs. I mean, that's a drop the mic right there. It is the fastest growing ETF in the history of ETF. There are hundreds of ETFs, thousands of them that are out there. It is the fastest growing one ever. Nothing has gained assets as fast as IBIT in the history of ETFs, Larry Fink said. This was on March 27th with Fox Business. I mean, wow, right? This is the CEO of BlackRock. And previously, a bit of the irony here is that previously he hasn't always been super bullish on Bitcoin. He's come around to it over time. As time has gone on, he's realized that maybe we need to get into that, right? Now that they have, he's thinking, wow, look at the possibilities, all right? So let's go ahead and move over to the ETF Tracker. So this is a fantastic website that I found just through a simple Google search. And I got to do a big shout out to him, heyapollo.com/Bitcoin-ETF. And by the way, any of the sites or articles I show in this video, I will post the link to them in the video description. So check them out later. But this is an absolutely awesome site that tracks the various ETFs, right? So right now here up top, you can see that we have 11 of these total. So we have Grayscale, BlackRock, Fidelity, ARK, Bitwise, Van Eck, Valkyrie, Invesco, Franklin Templeton, WisdomTree, and Hashdex. Okay, those are our 11 ETFs. Now, how much Bitcoin is currently held? You can break it down by each ETF themselves. You can see right now that currently Grayscale is the highest. Now, the reason for this is actually that Grayscale was a trust that converted to an ETF. So this is how they have more than everybody. But outside of Grayscale, who's actually growing the fastest is BlackRock by a long way. So BlackRock, as of today, has 256,660 Bitcoins. Now, keep in mind that each one of these, each Bitcoin, as of today's prices, is worth over $66,100. That's a lot of money, okay? Now, grand total here, BTC held 834,127 Bitcoin. That is very significant, right? Now, what's interesting here, and I'm going to kind of just scroll through this, do kind of a, an overview of some of these different areas, and I'm going to go back to my outline just so I can make sure that we hit all the important points here. So this is really cool, this chart that they have, ETF Bitcoin holdings over time. So you can see here where this whole thing started January 10th and where it's going. Well, it's kind of like a wave on the ocean, right? It bobs up a little, it bobs down a little, it bobs up, 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 it bobs down a little. You can see where this is going, right? Now, what's interesting here in this chart is this blue color here is the Grayscale Bitcoin Trust. And it is actually declining in the amount of Bitcoin that they have. Why? Why is Grayscale declining and BlackRock, the green one here, increasing? Well, the reason is if you look up here at these fees, you can see here that, from an institutional investor perspective, why would I keep going with Grayscale at 1.5% fee when I could go with BlackRock at 0.25% fee, right? So you got to think of this from businesses investing, investment companies investing. Do they want to save more money to their bottom line in the long run? The answer is a clear yes. So that's where BlackRock has basically undercut Grayscale with the fees that they're offering here. So you can see here in this chart below how Grayscale is going down in their overall holdings and BlackRock is going up. That's very interesting, right? Now, going down further, ETF BTC flows as of April 2nd, you can see that just about all the flows are positive, with BlackRock being the significant one here, right? They have the highest flows. Now look at the outs. So this is interesting. You can see that the Grayscale Bitcoin Trust has a good amount out, as well as ARK has a good amount out. This is Cathie Wood's Bitcoin ETF. No one else is doing that, right? Nobody doing that but those two in particular. So it kind of tells me, I think here with the Grayscale one, the reason they're going out is because their fees are too high. ARK, on the other hand, I think ARK is simply trying to realize profits along the way, is what it appears they're doing. I think they're trying to maybe be savvier than their competition. But in doing so, it's kind of a bit of a head scratcher along the way, because you say, okay, you're selling along the way, and what are you selling it for? You're selling it for fiat, right? So this kind of charts over into the area that Michael Saylor has often brought this up, especially with businesses. And it's the idea of a lot of businesses have large cash reserves. At some point, do they want to move to a different standard than holding a large amount of cash when the US dollar is declining in value? Would they be better off putting that money into something like Bitcoin, right? So why ARK is selling here is kind of questionable, right? Now, going down a little bit further, you can see here the Bitcoin holdings. This is how they've grown. Now, in this list right here, it only shows 506,000 Bitcoin. The reason why is that Grayscale is not included on here, but Grayscale is the rest of this that puts it over 800,000 Bitcoin, okay? And you can see here, I mean, if you're comparing these, it's really kind of between BlackRock and Fidelity have the most significant investments so far. Everybody else is kind of trailing behind at the moment. Going on down further down the page, we've got net Bitcoin ETF flows. You can kind of see how this is going up, up, up. You can see the Bitcoin holdings, right? So here's all the holdings going up. This one does include Grayscale. And you can see how that's kind of moving on up there. And then it's got a bunch of other neat little graphs and things like that here on the site. So this is Hey Apollo. So really, really cool site. I really like it. And I really like just being able to track all of the ETFs in real time. You can also see here, who's the custodian, right? Who's actually holding the Bitcoins here? So in the case of BlackRock, it's Coinbase. Coinbase is doing it at an institutional level. In the case of Fidelity, it's self-custody. So that's totally different. So they're saying Fidelity's holding the coins. I don't know how I feel about that. It's kind of like, is that higher risk or is that lower risk? I don't know. To be determined, right? We've also got Gemini here. The funny thing with all these custodians is that Gemini is only the custodian over one ETF, but Gemini was the original company that filed for the ETF all the way back in 2013. So when we say it's a decade-long process, they were the ones who started it. This is the Winklevoss twins. Pretty interesting on that front, right? Now, what I want to get into here, some big picture thoughts. So big picture. So these are kind of some numbers I want to break down for you. So the Bitcoin ETFs now have over 834,000 Bitcoins, or 0.039% of the total 21 million coin supply as of April 2nd, representing, as of today's price, like I said earlier, $66,100. This is equal to roughly $55 billion in investment. Okay? $55 billion in investment for this 834 number here. That's a lot. Now, where this gets even more interesting, the actual supply of Bitcoin, what is it, right? So if you were looking up the supply of Bitcoin, it is supposed to be 21 million coins. That is the most coins that'll ever be out there for Bitcoin. Now, the reality is that a lot of coins have actually been lost over time from the beginning of this process, right? When Bitcoin first came out, there's a lot of coins that went into wallets, simply got lost. They got thrown away, computers got trashed, Satoshi's coins that were mined have never been moved, yada, 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 right? Now, a report by Chainalysis from 2020 estimated roughly 3.7 million Bitcoin have been lost forever. That is crazy. So 3.7 million taken away from the 21 million leaves us with an actual supply of Bitcoin of 17,300,000. So what the revised supply number means, what this actually means here. So when I'm showing you this 834 Bitcoins are already locked up in the ETF, that equates to roughly 0.048%. So in 84 days, just under 3 months, the Bitcoin ETFs have locked up roughly 5% of the actual supply of Bitcoin. Now, we now have, think of this, 273 days left in 2024, or roughly 9 months, meaning within that 9 months, another 15% could be locked by the end of 2024, or essentially 20% of the entire supply of Bitcoin could be locked within that first year of the approval of the Bitcoin ETF. Right? I mean, mind blown. This is just crazy. So, if Bitcoin, think of this, is now locked up at the same increasing rate over time, we could see 20% locked up per year until 2029. That's only 5 years from now. That's going to be here before you know it, 2029, right? Now, you can't talk about Bitcoin without talking about Michael Saylor. Okay, so if you're unfamiliar with Michael Saylor, he is the head behind MicroStrategy. He is a huge proponent of Bitcoin. He has gone all in. He is a significant investor. MicroStrategy owns somewhere in the ballpark of, I think, 200,000 Bitcoins, etc. Now, what Michael Saylor's saying, and this is this article here on Cointelegraph, essentially is that AI ETFs will power a decade-long gold rush for Bitcoin. Michael Saylor, okay? Now, what's interesting here is basically they're saying institutions will compete to capture as much of Bitcoin's ever-decreasing supply as possible until the end of 2034, as 99%, this is the important part, 99% of Bitcoin will have been mined by then, Saylor explained. So 99% of all the Bitcoin that will ever be mined will be mined by 2034. So Saylor went on to say, I think that we're in the Bitcoin gold rush era. It started in January of 2024 and will run until about November of 2034. Excuse me. So you've got, according to Saylor, 10 years based on mining. Now, according to what I just shared with you, you have 5 years based on the ETF. So somewhere, arguably, within now to the next 10 years, you have a massive, massive opportunity, all right? Now, for the sake of today's video, I want to wrap this up. I've got some very detailed, noted final thoughts, and we're going to get to that part right now. All right, now let's get into today's final thoughts. So I've got some very detailed ones for you, and you're not going to want to miss these. So first of all, the current market cap of the entire crypto industry is $2.59 trillion, all right? Now, the prior cycle peak was $3.1 trillion, and numerous metrics, such as searches for keywords in Google, shows that this current run that we're on, remember we're talking about the Bitcoin ETFs here, has not been driven by retail yet, as none of those metrics have picked up. So what I'm talking about here is keywords, searches for crypto, searches for Bitcoin. They usually correspond with a bull run by retail. We haven't seen that yet, right? We haven't seen that spike, okay? Now, I think this is price prediction time. So this is my own price prediction. I'm just a regular guy like anybody else, but here we go. My price prediction for this cycle is I think this cycle could top out somewhere around $10 trillion. I really do. And I think a lot of that plays heavily with these Bitcoin ETFs. So the prior cycle was 3.1 trillion. Could this one go over 10? Why not, right? Tell me why not. Why is that not possible? I think it actually is, okay? Now, with that, where do I think Bitcoin price may peak out for this cycle, okay? I think Bitcoin price, based on everything that I've seen, based on following these ETFs, based on those numbers I gave you earlier, if you look at the long-term kind of historic trends here, I think the Bitcoin price could be anywhere between 350,000 all the way up to 650,000. We've got a wide range and a lot of room to run. The point is, the prediction here on my channel, you know, I used to do a lot of coin predictions. I'm giving you one today. I think Bitcoin could possibly do a 5 to 9x from today, all right? Now, what about the large liquidations? So if you've been following the crypto industry, you see this every once in a while where, you know, we'll have a bunch of green days in a row and then there's a huge red day. And usually on those red days, if you look at the chart, you can see it gets pulled way down, like almost straight down, and then it pops immediately back up. What's happening there? What is creating that? Well, this is basically something that is known as liquidation event. It's triggered by whales, so basically a large holder who's manipulating the market, and then they are liquidating people who are in long positions, short positions. They are getting liquidated, okay? What this is this is kind of this age-old rinse-repeat cycle that goes on and on and on in crypto, where basically somebody who doesn't have any money takes a gamble, takes a risk, hopes it pays off, and then a whale manipulates the market to take that money. That's exactly what's happening here. It repeats over and over and over again, okay? Now, the interesting part with this is the whales, in particular, they cannot necessarily control the long-term overall historical trend. So you end up finding a lot of people who choose to invest in cryptocurrencies really look at it from a much more long-term, global, year-long kind of perspective, as opposed to day-to-day. If you're a day trader, it can get a little dicey out there, right? Now, when this started in January, back to the Bitcoin ETFs, okay, there was already over 600,000 Bitcoins owned by Grayscale, because remember, they were a trust that converted to an ETF. So, as Grayscale has lost Bitcoins, we've only truly netted roughly another 200,000 or so. So they've gone down, BlackRock's gone up, but the overall net is about 200,000 Bitcoin, right? So what happens, listen to this, what happens when there isn't supply to keep up with the rate of buying? What happens then? You know what happens then? So buyers get less, right? Buyers pay more, okay? But Bitcoin is conversely worth more. That's what happens next, right? Now, when Grayscale's decline levels out, we will see a meteoric rise in the price of Bitcoin. I truly believe that is going to happen, okay? Now, the Holy Grail. What is the Holy Grail of this whole thing? This is like the chess move part, okay? I like to look at things in terms of a chess move. I like to be 1, 2, 3 steps ahead. What could be happening next, right? Here's a prediction. So the Holy Grail here is, at least as I see it right now, is Bitcoin being able to break into corporate 401k retirement accounts via the ETFs and tapping into roughly, this is how much retirement accounts are worth right now, at least here in the US alone, just the US, $36.7 trillion is sitting in corporate retirement 401ks, all right? That's a lot of money. That is a significant asset class, okay? So the pros here is if Bitcoin ETFs can get into 401ks, we have steady, mindless, automatic investing over time. What this looks like is somebody gets paid bi-weekly. They have a percentage of their check that goes out to their retirement account, right? And that's it. And they just buy in week over week for years and years and years, as long as they work for that employer, okay? Now some cons. Cons here is that typically it is platform specific with that employer, right? So you may have platform specific rules limiting contributions, okay? So they may say, well, you can buy into the Bitcoin ETF, but we'll only let you buy up to 5%. They may just pick an arbitrary number somewhere, right? Sometimes they have all the power, right? And with Bitcoin, it historically has been a volatile asset, right? It goes up, it goes down. Long term, it goes up, 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 right? It's diagonal up. It's like a heartbeat. But they may say, well, there's too much volatility, so therefore we're only letting you get up to 5%. That could be a limiting factor, okay? There could also be limited platform-specific funds, right? So just because you have a corporate retirement account doesn't mean you're going to have access to all 11 of the Bitcoin ETFs. You may have access to one of them, all right? If that, okay? So there's some issues there. Now, presently, what does this look like presently, Jesse? Well, presently retirement accounts, and many of them, you can neither buy Bitcoin or the Bitcoin ETF. You can't buy either one. Right? Right now, you cannot buy either one in a ton of accounts. This is true. This is how it is right now for anybody with corporate retirement accounts. So for example, I've got some corporate retirement accounts, right? And my accounts right now are with a company called Empower. Empower, look them up. They're the second largest holder in the entire United States. I want to say they bought out Mass Mutual at some point in time. Huge, massive company that holds a ton of money in retirement accounts, right? Second largest servicer, and it currently offers no options, zero, not a single option. So thank you, Empower, for offering me nothing, right? Great, okay? Now, in another example, Another platform that I like to use that I do actually like a lot is Acorns. All right, I use Acorns a lot. I've even got a referral link if you want to check out Acorns. Great. If not, great. I personally use Acorns. Okay, so I use it for all kinds of different things. I've got an investment account. I've got an IRA on there. I've got an account for my son on there. I've got a checking account on there. I got all kinds of little accounts, right? But the main investment account, they offered a while back that you could buy into a Bitcoin ETF. So this is exciting, right? But they only gave you one option, and you could only put in 5% of your account. That's it. So again, you know, what I would like in a perfect world is to be able to take my retirement account funds as I see fit, and if I want to put them in a Bitcoin ETF, then I want to put them in a Bitcoin ETF, period. I shouldn't have a cap on how much I can contribute, right? There shouldn't be any kind of limiting factors, I think is what I'm getting at. Because right now, like going back to the thing with Empower, is that if you have Empower through your employer's paying a match, right? That sounds great, but you can't get into the Bitcoin ETF. So in the meantime, at the end of this year, you'll maybe make 7 or 8% on your entire retirement account that you've been investing in all year long. And the Bitcoin ETF could have doubled, tripled, whatever, right? The price of Bitcoin through the roof, yada, yada. So the point here is that there's a huge opportunity that most people, quite a few, cannot access right now, right? That needs to change, okay? So, here we go. What's the result, right? Here's the result. So the heat is going to get turned up on these servicers to offer what people want, right? At the end of the day, what people want is going to be loud, and as people realize that they can't get into the Bitcoin ETF, they're going to get mad, okay? These companies are going to be taking a lot of heat by not allowing this. Now, retirement account holders simply want to be buying the best asset in the safest way and have their employer match their contribution, right? I mean, that's really all we're getting at here. So, why is this the Holy Grail, right? Why is it the Holy Grail? Well, as servicers steadily allow access, the Bitcoin cycle, in my view, I think will be broken, okay? Right now it has a cycle where it's got 3 good years, 1 down year, 3 good years, 1 down year. I think it may actually break that, or at the very least not be as volatile as it currently is, all right? Now, we also have steadily long-term investment that will raise Bitcoin into stratospheric highs at a level yet to be seen. So this is the idea that these Bitcoin ETFs, they're the catalyst that raise all boats. They will raise the water for everybody, okay? That is massive. Now, Bitcoin influence, remember, as the moon in our analogy, will raise the alts as well. So that's really important. So, again, going back to my prediction on what I think this could do with Bitcoin right now with this cycle, as I said earlier, 350 to 6, 650, 5 to 9x from where we are today, I don't think that is outside the realm of possibility for Bitcoin. What that means to altcoins could be even more, right? Now, something else to be mindful of here is what are some wildcards in this whole thing, right? There's always wildcards that show up in crypto. They come up all the time. What could a wildcard be? Well, we could see other countries outside of the US. Remember, this is a US-centric thing, this whole Bitcoin ETF. We could see other countries outside of the US start their own Bitcoin ETF and create even more scarcity, right? That could potentially happen in other financial markets outside of the US. This is very possible. That's interesting, right? Kind of like El Salvador uses Bitcoin as currency now. They have a Bitcoin reserve that they are steadily building up, right? Who's to say they don't start their own Bitcoin ETF at some point? They could, you know, their own financial market. You look at a country like Japan, something like that. You look in Europe. This could easily happen across the board, all around the world, South America, Asia. You could have various Bitcoin ETFs popping up in different financial markets around the world. that's a wild card, okay? So could be even more demand than we realize, because what other financial players are going to realize in these other large countries is, why aren't we getting in on that? That's what they're going to say, okay? So there's that. Now, the other thing here, currently only one ETF allows self-custody, right? Remember, Fidelity. All the others have custodians. So the way I see this is the custodians primarily are Coinbase is one of the big ones, right? What happens when a rogue actor targets Coinbase, like a North Korea, for example, who's been historically documented to be part of hacking groups in the crypto industry? Who's to say that they don't try to go after this somehow, some way? I don't know. I don't know what that brings, right? So there is risk here. It's not that there's just no risk and this is just straight to the moon. There's definitely some risk with the Bitcoin ETF, and that's part of it, is rogue actors. There have always been scammers in crypto, and as long as this is a worldwide enterprise that's loosely regulated, there will continue to be a ton of scammers, and some of it being government-sanctioned scammers, okay? So think about that. Now, ultimately, where this all rests is you can participate, I'm talking to you, person watching this, by purchasing one or more multiple ETFs through any platform where ETFs are sold. So I know for a fact right now you can go on Robinhood, you can type in the different ticker symbols for the ETFs, you can find any of them. You can buy them that way. It's basically buying Bitcoin, but it's buying a stock. You're buying an ETF, okay? You can participate in this whole thing by buying Bitcoin itself, just buying Bitcoin, all right? You can purchase it through a centralized exchange, a decentralized exchange, somewhere like Coinbase. I do have a referral in the video description. You can go there, get a free bonus, whatever. You can do it through Coinbase. You can do it anywhere else. Anywhere where you live, you can use Binance. You can use whatever exchange they have in your country, okay? Now, also, you can participate in this by purchasing altcoins that are going to be heavily influenced by Bitcoin. Now, not all altcoins are created equal. Some are good, some are garbage, right? Some are real projects, some are fake projects. Some are just straight up memes that are straight gambling things and could go straight to the moon, right? You could make a ton of money off something like that. There are all kinds of options. But the point here is that if Bitcoin is the moon influencing the tides, which is the altcoins have some serious potential to have a massive, massive increase in valuation, all right? So, I'm going to cap this video right here by saying the gold rush, as we know it, is 5 to 10 years. So as I stated earlier, just to recap, I think that the Bitcoin ETFs could potentially tap out the whole market within 5 years. Michael Saylor says that he thinks Bitcoin mining could tap out the whole market within 10 years. Where it goes from there is anybody's guess. But this is the world's first scarce digital asset, and you can now get it not only by purchasing the keys yourself, not only by getting some altcoins, but you can also just simply buy the ETF, which is like a stock. You have a lot less risk. There's still risk here, but you have less risk in terms of your access to this potential life-changing technology. And that's basically where we're at, right? So we have a life-changing opportunity that anybody who's watching this video could take advantage of today, and a decade from now, you're going to be doing pretty well. So that's where today's video ends. I hope you enjoyed it. I hope you see how you could easily become a millionaire through one of the 3 paths that you take here. I hope you see the potential, the promise here. There is a significant amount of money, what I say, $55 billion or so, that's already in the Bitcoin ETFs, and it will only increase from there as more and more access comes about. So remember, all the retirement accounts, we're not there yet. We really aren't. We've got the Bitcoin ETF, but the retirement accounts aren't giving any access to it. So I think personally that anybody who has a retirement account should be calling their servicer and should be asking for the Bitcoin ETF. And as this happens, as more people get into it, it's going to just simply increase the value of it long term. Now, there could be hiccups along the way. Like I said, it's like a heartbeat, but it's like a diagonal heartbeat. so it continues to go up for us in the long run, and in the long run, you should be doing just fine. So as always, I hope you enjoyed today's video. If you did, make sure to hit the like button. Make sure to subscribe to the channel, that helps out a lot. I'm also on Twitter, you can find me there. I've got a website, you can find me there. You can find me all over the place. Feel free to reach out if you have any questions, leave any comments. I'd be happy to comment. I'm sure a lot of other people would as well. And as a friendly reminder to wrap this one up, this is Jesse with Keeping Real Finance, channel that always has your back, tells it like it is, and I will see you on the next one. Later.